videos
Yep.
here? Perfect. Then you have the
Yep.
position trade, right? Did you get a chance to see the position trade videos?
Um, daily position trade. I don't know if I've watched that one or not.
Okay, so this is where you start.
And-
So basically what you want to do here is just you
Oh well. Oh no, I have seen that. Yeah, yeah.
okay, yeah, you should
Yep.
see the position trades and then there's the day trading course, right? So the day trading course is basically trades you can do with inside of a position trade. Okay, but what we're going to do is focus kind of like steps, right? So as you move forward, you just kind of want to get yourself some basic steps. So here are some steps that we, kind of like the basis of what we have. Now you can add little things that you can catch and trigger because here's what's the keys are, right? So you want to focus on this, right? Volume, right, is going to dictate the the movement, right? So think of it like it's almost like fighting a boxer or reeling in a fish, right? Everything is strong in the beginning, so their reactions or what you do to it is a little bit different. So do you fish a lot? You ever go fishing?
Yeah.
Yeah. So
Yeah.
what?
Actually.
Yeah. So when you when you're out there and you cast out there and you catch your fish and you start reeling it in and you're like, oh, all right, I got one, right? You're in total control because you caught your fish, and then all of a sudden it realizes that it's caught, and then it turns on you, right? And in the beginning,
Oh yeah, yeah.
the first turn is going to be heavy. So depending on the line and what you're doing, you want to wear that fish down. So that's where we have the tension on our line a lot less, so it could pull the drag, right? So then the fish goes running and it starts pushing along. Now the first time it pulls back, it's pretty strong, and that's how we can tell how big the fish is because how much it's starting to pull back, right? So we let it take line, take line, take line, and then it gets to the point where it's the end of that line, and then we start wheeling it back in, right? That's its first move. Now it's starting to work its stamina down, right? And really, what that is, it's the volume of a trade that's being worked down. So now you're kind of like reeling it in. You're like, yeah, okay, here we go, here we go, here we go. And this is also why we have limits to how we execute profits, how we take profits, how we grab profits, and what we do on it because we don't expect the fish just to be reeled in, right? So then we get it going.
Right.
We might make 10, 20, 30% profits, and then it turns around on us. And boom, it's running again. Now it's pushing again. Now this goes on until eventually we wear it down, right? So once we get it to the point where we realize that our pull is bigger than its pull back, right? And we start realizing a lot of people basically they call them support and resistance lines, right? This would be if you're shorting, there would be a resistance line that it continues to try to get near, and eventually it gets further away from it, showing its weakness. And that's how we basically, that's when we want to attack. So, as a position trader, what you're doing is you're coming in and you're attacking it from the point of the earliest point of weakness, right? And for instance, right now, Solana has just crossed the 1 hour negative volume, which would be the best point of considering that that's basically when the fish has gone through 4 or 5 fights and now we've got a chance to really like dig into it. So think of it like that. The only time to lose a trade is if you're in too early, right? Because the trades that we're looking for in a position trade are trades that are going to offer at least 2, 3, 4% moves. So if our goal, right, our goal overall, most people, this is where we have to really put our goal in, is that our goal is always focused on a very simple thing, which is most people, when you make 20% on your bag a month, that gives you a nice opportunity to basically make 200 to 240% profit per year on your overall account, right? So that's kind of like a basic goal. So what we want to do is take that goal and bring it to a point where we're taking the monthly and we're using it as a per trade goal. So that way, when we do 10 trades, we can do a trade review and then say, okay, out of these 10 trades, even if you lost 4 of them, right? You don't have to be the best trader in the world while you're learning. But if you lose 4 out of 10, for 20% stop loss. But on the other 6, you averaged 20. Then at the end of the day, you're up 40% at the end of the 10 trades. Right? That's kind of like the worst case scenario. You're up 40%. So it's like, okay, I did what I was supposed to do. Now, obviously,
Right.
as you get better at what you're doing, you're going to realize that even being a terrible trader, if you're following the system, you're more than likely going to be up 100 or 200%. Like a lot of guys are like, man, I'm really struggling out there, and then they do their 10 trade review, and they're like, hey, man, I averaged 300%. And it's like,
Right.
yeah, that's, they don't realize it because when you're trading, it basically comes down to you're like literally, you're doing one trade at a time. So you think that you had a bad day because you had one trade that went the other way on you. But when you do 10 days, you're like, hey, I actually won 6 out of 10, but my losers were 20, but my winners were 100. Right? Next thing you know, you're killing it, right? Like, so for instance, here's Solana, right? Here's a trade I'm in right here.
Hmm.
See that? We're
Yeah.
currently watching this fall because of the 1 hour, and we're able to take advantage of it. Let's see where it's at here. All right. So here's one trade of the week. We've been kind of like um, just tracking the trade here, but this is the trade that we're gonna like review because these are the trades that we're focused on as far as like how they're falling, right? So here, this trade was actually taken right here when the 1 hour couldn't bounce off of the retest, and then boom, I entered the trade right here to take advantage of the 1 hour trend, which just basically came about. Now I'm expecting this to actually like, rotate the other way. So we want to come in here and set some profits in here. And we'll set up 25. And when it's falling, let's close that short there. Let's see. Yeah, we'll close that at 55 just to set one target in there real quick. So 29.55. There we go. We just want to start whittling off um, some profits in here. All right, so now,
Now, will it automatically do that, or is it just alert you?
no, it's automatically. So right there, you see how it just dropped it? It hit those targets. So it's hitting those targets. So now what I want to do here is set in my stop loss where we're at. So I'm going to take a 26 and we're going to do like a 75 and we're going to close out 100% of that. And then on this side, if we go to 200%, we'll take the whole thing. So 26, 75, 200%. Stop loss position loss must be higher than current price. Oh, my bad. 29, 75. Now we're getting a little bit higher, so we'll make this 80. I want to see if this can. This one I want to give it a little room here. If it does hit it right there, then we're good on that. It doesn't matter. And what you can, once you have everything in there kind of set up like that, you can move your second stop loss. So that's my original stop loss. So if I click here, there are no positions in that stop loss. It's just basically set up. The second time we do a stop loss, it'll be in positions, right? So meaning, let's say if I want to take my 29.75, and then when it hits that, I want it to take 25%, and then over here at 150%, I want it to take 25, right? So now when I set these up, it's a little bit different. There you go. It's because now when you have a secondary, see how they just hit right there, take order placed. So what it's actually doing is you can take partial stop losses as you move through and keep increasing your profit side. So your first stop loss, you can keep it where you're.
Wow. So you're pretty much going. I mean, you're taking profits or stopping just constantly,
Yeah. I mean, I'm
like it's instant. Or it could be.
Yeah, I'm siphoning off profits as it runs through. Hold on. All right. So what you're doing is you're using you have your main stop loss, right? Which is the one you set up. And normally that one, when you put it, is going to have like positions. So that one right there, if we go to look at edit, notice how there's no quantity, right? And because there's no quantity, it doesn't have like in betweens of what it takes. Like it's not taking 10% or 20%, right? So there's no amounts. This just means that at this point of whenever it hits that 29.80, it's going to close completely. Or if it hits 29.24, it's going to close completely, right? So now, if we want to take that and increase that and let it have more of a bounce or whatever we want in there, we can come over here and say, okay, you know what? Make it 85. Right, and that's just me saying that when this gets to 99%, right? That means that it would close at 99%. So if it gets to 29.85, then 99% would be my final take profit. See right there, see how it's moving? Now, let's say if I want to take
Mhm.
profits in between, or if I want to survive this bounce and maybe like add to my position, right? Then it would be something like taking this here, going, you know what? I'm going to put this at 90. Actually, it'd be lower there. And we're going to say, now we're shorting it. So we should be 20, 20, 20, 90. Now, I'm basically at 90% profits. If it hits that, then we'll take profits. But what we do in between there is you can actually set take it profits on your stop loss here. And when you hit a secondary one, it has positions, right? So let's say that I want to siphon off 25%. So let's say that there's a nice little run like it had earlier. And I want to say, you know what? I'm going to keep this slight closer. Let's say the price is 29.83. So I put 29.85. And I say, when it hits 29.85, go ahead and take 10% profits at that level. Right? So this is the way to siphon off profits. And then here you can just be generic. You can just put 300. Because it's not, you want to put it higher than your original, just so that you get it out of your way. But you want to put it higher than your original, so that way it's just because they have to have something from you. You know what I'm saying? Because it can't place the order unless it has a number. So if your original stop loss is set at taking profits at 200%, just put a generic 300 or 400 in there because you don't really want to close out. But what you can do is use that for take profit. Like, so for instance, let's say I come back here and I say, hey, you know what? See how it has quantity now? Now that I've decided that there's an area that I want to take profit, right? I could come in here and say, see how the 29.85 hit? It took that profit. Now I can reset this again for another 10%. But let's say if I want to take profit at 29.80, right? So let's say when it hits 29.80, I want to take profits. I could select taking 25, 30%, or 40% profits at that time. So that's a way of siphoning off profits while your trade is happening. Okay. Now, the other thing you can do is you can use the blue boxes where you can just literally manually, let's say this is falling down and it's going crazy. You can manually type in the prices as it's falling that you want to take. Like you hit the little blue thing, you type in the price, and then you type in the percent, 25, 35. And that way you're taking your profits as you go along. So those are multiple ways of taking your profits out of there. Now, what I want to kind of use Solana for is how to look at the positions that we're looking for. Um, Hold on. is how to look at this trade. So a lot of people think Solana is manipulated, which it's probably a manipulated coin overall, just because there's a lot of people who are in it and they need it to do certain things at times. So this is where using the system and the indicators is where we really test them, because it has if they can win in a manipulated area, then we're in a good position here. Now, what we have here overall is there'll be some bounces here. We'll let it bounce. But okay, so let's go back and take a look at like our basic here for our position trade, right? So the basics here that we want on a position trade, right? We want a 4-hour cross, right? So the big one that we have is the day trade, right? So daily position trade. So it's on a daily red moon, right? 4-hour cross, 2-hour cross, checklist. The checklist goes for every single trade. Okay, so no matter what you do, you don't want to trade against the 30, the 15, and the hour. So for instance, right now, notice here on our RSIs, we're working with the 15-minute hitting the bottom, and we're starting to get this push up here on this bounce. The 30-minute, is pulling down. So the 30-minute is still in our favor here for a short, but the 15 minutes getting towards the bottom, and the 1 hour is at the bottom. So what I mean by not being against you, right? So meaning this. So when we take a look at this, we can see the 1 hour, the green is flat, right? It's not against us. It's
Mhm.
basically flat, meaning that it's not going, we want to short at this moment. It's not going up. It's flat, so it's not against us. The 30-minute is heading down, meaning that if we were going to take a short in this position or whatever, it's still in our favor. And then the 15-minute is in our favor. So at this point right now, the trend is still down, right? So this is where when you make
Okay.
your decisions of how you're entering, you would basically want those things to be in sync with what you're doing, right? It's just kind of like a having a safety guard to make you say, okay, all right, let me rethink what's happening here, because the bottom line, the 1 hour is flat. When we take that time to look, we can see right now that the price is starting to bounce. Remember, we just came from 29.60, right? So the momentum is starting to come off of a bounce here. Now, it is still coming back and dragging itself down because the 30 and the 15-minute are pulling down. Now, how far they're going to pull down, we don't know. But we don't want to be in a game of too early to make any decisions. We want to be in the position where when we make a decision, there are very simple steps that we have, and then when we make it, it's like we're making it with confirmation, right? So it's a very simple scenario when it kind of like comes out like that. Here, it's in kind of like no man's land. The 1 hour is going sideways, 30-minute and 15 are headed down. We got a bounce right now. It's not 100% in any favor in my way or against me, but it's not, completely the way I want it, right? Because I do see the 1 hour starting to, fight itself around. So we want to make decisions where that checklist is always in our favor, right? So right now we could say that more than likely, because the 1 hour is bigger than the 15 and the 30, if it decides that it's bouncing, more than likely the pressure is going to be on the upside because the 1 hour is bigger, right? That's kind of like the key to those lower time frames with the 1 hour. It's just regulating the power of the 1 hour, right? Which is also the key to pretty much all this is focusing on volume. So let's pull up the volume key here. So the one thing that we focus on when we do like longer shorts or whatever, we want to be in the position where the volume is on our favor. Right here, we can see now there's our negative line, our 0, 0, right? So here we don't have negative volume on the 2 hour, and we just got our first set of negative volumes on the 1 hour, which means we are now on the negative side, which means the fish that we're reeling in is basically halfway done fighting, right? This is where it starts to hit fatigue, right? So this is the 1 hour time frame is where you match your fatigue of your trade. This is where the trade is now basically initiating fatigue, right? So this is where we want to start hunting the bigger trade down. So let's look at Solana on the overall. and how to make our choices as far as like what position trade we'd get into, right? So on the overall, when we take a look at the daily, that's kind of what we want to focus on when we're trading the bigger, longer trades that we can get into and just kind of like let run through. So first things first, right? So let's get rid of RSIs, delete this, delete that, delete that, and we'll
Oh,
take this out of here. Okay, so on the daily, they have, and what I'm going to focus on too, guys, is confirmation of moves, right? A lot of times people, it's just impatience, right? So you have to have some core things that you put inside your head. So when you enter a trade, right? Because you've been trading for a little bit, what's a couple key things that you kind of go in and you say, okay, this trade is this is where I'm going to enter. Like what things do you look at and we use for confirmations? Do you have any steps for confirmations, or how do you normally enter a? Let's say you're doing a long or something like that, or whatever trade you're doing. What's a confirmation for you?
um, I'd have to look at my notes.
Oh, okay, okay, yeah. No, I'm just saying because how long you been trading?
Um, I mean, I'm not good. That's where I'm having such a hard time. Like, for some reason, I'm not getting it. I think I've watched so many and I'm so confused. Like, I'm just trying to make, like, kind of like what you say, the checklist.
Mm-hmm, mm-hmm.
Um, I feel like I'm just on information overload. And so that's what I've just started a notebook and I'm just trying to condense it down to where I don't feel like I'm making a mistake, you know?
Okay, so
Like some days I'm so confused.
so overall, how long have you been trading? When did you start?
Um,
6 months, a
what year
year?
is it? 23, probably. I started 2020, 21,
Okay,
2021.
so you have about 2 years underneath your
And
belt.
well, and I just bought it. Yeah, I just bought it. And then I would just do something when it was obvious, I would buy
Hmm.
it and then it would go up and I would sell it.
Okay,
But didn't really know what I was doing.
yeah, and then you started studying trading over the last year.
Yep.
Okay.
Yep. I mean, and I've been watching, and that's when I found you, and I was like, I just need a system that I can follow and stop because I had just even over the last year, I have so much stuff in my head, like I can't get it down. So I was like, I just have to have something that I follow and just do it.
Okay. So yeah, I mean, I'm not. So right now, if you were thinking about after a year of kind of like information overload, is there any things that you kind of like when you make a decision to go long? Is there anything that like what's the trigger? Like right now, not off our system or anything, just kind of like what you have in your head. If you're going to buy something long, what makes that decision? Like in the recent past, like when you went long, why did you do it? Is there anything that was particular, or is it just because something fell so far? I mean, what was the thing that made you say, you know what, I'm going to buy this right now, this is a long position? Nothing particular. I think I might have lost you. You still there?
Okay. Sorry.
Yeah. You're good.
Yep. Yep. Back.
Yeah, so on that, I mean, so like right currently, like over your last, let's say two months, and you went long. Like, what was the one trigger that made you say, okay, you know what, this looks like a good long? What were you thinking or using as a identifier, or what we call a trigger to buy a trade? Sure.
Um, where the volume indicators and the RSI
Okay.
that
Yeah, whatever. I'm just trying to, so because what I like to do is kind of figure out how you are currently seeing something. So then when we kind of go into the explanation of the system, I can kind of move it towards how you already think a little bit. So when over the last month or two, let's say without our system, let's say you used to do a long in the last couple months. What just makes you say, oh, you know what? Let me buy this. This is going to be a good long. Was it news? Like, were you buying
Just
stuff off news, or was it just, something fell so long, or
when it just starts trending down when people aren't, and then I feel like I'm getting at a lower price, and then it'll go back up.
okay, okay, yeah. So that's a lot. A lot of people use that where basically they kind of have a. It's almost like having um, an average price. Like that, okay,
Yeah,
Solana normally goes up to $40. So if it's trending at 30, it might be a good buy, right? Or something where Solana has a
right.
big run
Yeah.
and it goes down, and you're like, all right, what's down 40%? It's got to go up 20.
Yep.
Yeah. Okay. So
Yep.
that's
Yep.
that's a basic form of trading. Like that's just it's more, and that you can be calculated in more what's called accumulation. And
Yeah.
what accumulation is, it's a way to compound your position where if you have $1,000 and you're like, you know what, this one coin is the coin I like, and this is how you normally start off. You pick one asset that you like, and when it finally falls down to a low price, and you're like, all right, this has been going sideways for a while, and this is pretty low, and you put your $1,000 in, and then it goes up 10, 15, 20% after a week or two or whatever, whenever the pop happens, and you're like, boom, 20%, and then you sit back and you let it die, go through its momentum, and then finally it hits a floor, starts to go sideways, and you're like, okay, this looks like a bottom. And then you take your 1,000, 1,200 because you made 20%. You take your 1,200 and then buy again, and then it goes up and you
Right.
sell. All right, that's compounding, right? So that's accumulation
Yep.
because you're using the same $1,000. You're just getting more coins for your dollar, right? So it's a great way to hodl and hold and increase your value over time. Okay, and that averages out to be, an average of about, when you go back and forth, it's not too bad. It can get you to a point where you can get a nice double up at least once or twice a month. And if you're watching it constantly,
Right.
you could do it four times. So you could take your money and you can go from 1,000 to 4,000 in a month if you're constantly, moving properly. But minimum, you can at least get 420% on that. So you can see a double up every month, which isn't bad. If you're doubling your $1,000 every month, you're doing pretty good. Okay, so that's a normal concept. All right, so here there's things that what we have is, and you'll hear people. I'm sure you heard this, where people basically say there's like a double move, or somebody will say there's a retest, or what's called a pullback, right?
Yep.
These are confirmations. What a lot of traders like to do is they like to see something happen because they don't really know when something is actually has a sensitive where people are looking at it. But the thing is that when is a whale going to buy, and then when are the people going to follow the trend, right? That's what they're trying to catch. And how they determine that is that the very first move will happen. The whales will sell off positions. And then when it pulls back, that's when people buy in and they catch what's called the second leg. Okay. So that's probably something you've heard a million times if you watch YouTube or anything like that. There's always the
Yep.
second leg, right? And that in the
Yep.
yeah, and that what things people have to realize is that there's certain trades that happen, and depending on your time frames, they happen different times for different time frames. So within those time frames, trades happen multiple times, but there's also different types of trades. Like for instance, there's a trade called the pullback, right? Or a retrace, right? And what those kind of are is that the first time that a coin makes a move, there's a pullback, and what that basically is it pulls back because it has to breathe, because people have hit a level of the first leg money has ended, and now people are kind of selling and buying, and it's in that middle section, and it just kind of goes sideways because everybody's determining whether letting all the orders come in. And then once the orders settle and they say, okay, and they start to see the momentum pick up again or volume, then people buy in on that second leg because now they know that there's a floor, and now they're pushing that floor for the next 10-20%. Right. So that's normally we call it the pullback, right? And a lot of people like the retrace, right? Where um, but the difference is a pullback happens because the people who bought early had hit a level of profits, right? Meaning that most whales set profits at 20 to 30%. So once those marks start to hit, then what happens is they automatically those orders start to flood in. And then the momentum starts to end while people are buying, and it starts to go sideways because buyers are running, bad investors are chasing the candle, the green, and then it's the sellers are automatically taking profit. And then you get to this level where it starts to go sideways, and then eventually people will panic. And based on how much they panic, they will push out of their position, and then they'll have this little pullback, right? Where people are like, oh shit, is this the end? And then what happens is that pullback goes into a line of where people who are basically the main traders, they're waiting for this to happen because they call this the second leg, right? So this is where people come in, and once they see that pullback, which is simply normal profits being taken, and then people panic and create a bigger pullback, that's when the next traders get in and show that there's momentum, because what will happen is 80% of the people that are bad traders will see that they just sold when it was coming down, and then all of a sudden it started going back up. So what do? They FOMO, which pushes the second
Right.
leg, right? This is just all this is human nature. And then boom, they start funneling back in because like, damn, I sold too early. I knew it was going up. And now they believe in their confidence that they knew it was going to go up. So they have confidence it was going up. And now that makes them put more money in. And you see that second leg push. And then what happens is the whales who have set their first stop profit taking, half of their profits already been taken. And then on that second push, the rest of their profits get taken. And then the guys who ran the second leg only want 20 to 30%, and they sell out because they're scalpers. And then you see a nice retrace, right? The difference between a pullback and a retrace is the pullback happens because it's the first set of profits. This retrace is what happens is because it's retracing back to the level of the floor that was created by the first set of profits. A retrace happens because it retraces because scalpers have now sold. So it retraces back to the price where the normal profits were taken. That's the difference between a pullback and a retrace. And depending and knowing where
Okay.
you're at that particular moment also determines um, how you should be looking at, your how you would play the position. But understanding that these pullbacks and retraces are going to happen in a trade and where they're at a particular trade will allow you to kind of like see the trade in a bigger thing, right? So we're going to start off here. And what I was talking about earlier, and you can see in the Discord, I was talking about second moves, right? I'm going to do a video on this, and this is just a little bit. Uh, where did I write it? So right here. So I want to start posting these types of trades, higher time frames, keep winning more trades. So so getting the ideal, right? I want to focus on the 2 points, right? And the 2 points are basically the first move and then the second move, right? It's basically learning how to understand that you never miss a trade, right? Because trades always happen. But if you're too early on a trade, then that's where you kind of get into a little bit of problems. But at the end of the day, if you wait for confirmation, then you're always in a good position, right? Meaning that if you see something pumping, it's going to have a pullback or a retrace, and you can take advantage of the pullback or the retrace, right? So either way, it has to have a pullback or a retrace. So you never miss a
Okay.
trade, right? So this is where when you see something pumping, there's no need to get excited. You can just wait for that proper entry, right? And that's where people make the
Okay.
mistakes because they rush and then they don't wait for that thing to happen, and then they end up in no man's land where they might hop in and they moves 10% and then it's down 10% and they're like, oh shit. And they just now they're at the mercy of the market, which is how much are people going to panic or how much are the people whales going to sell, right? Now you don't have a clear path of what you want to do. You're just kind of there, right? So you know, key to winning more trades is jumping in the trade, simple wait for the next trade to trigger happen, right? So this is what I'm saying here. Don't jump in a trade, simple wait for the trigger to happen. Meaning that find the steps of why you're in a trade and the concept of why you're in a trade. And then if you miss the first one, just wait for the next one and get better at
Okay.
getting in the first one, right? So let's take a Solana for example now. And we'll kind of run this through a total, what we call daily position trades versus everything else. So the first thing is we're going to start with is the trade that we're looking for, right? And the trade that we're looking for is our daily trade, right? So on our daily trade, we are looking to get our daily moons, right? And this is what I kind of wanted to point out. And I'm going to show you this over and over so that it becomes part of what you're seeing, right? So here's the first moon here, right? Here's a green moon, right? Pops in here. We come down. We don't have the volume that we want, right? Because volume is key. And as we go through this position trade, notice that the first moon creates a trend, right? There's a push once we get our trend. So now with our trend, that gives us two confirmations. So two things that you want to look for. You want to look for double moves and confirmations. That's really all you're doing is you're seeing that things are building momentum on either downs or ups, and you want to have something that you can look at every time and go, okay, that makes sense for what I'm looking at. All right. So first thing is we get a daily confirmation of a moon, right? And simply put,
Okay.
that just allows us to know that hey, this trade is eventually working towards a long, right? Or at least at that moment, that kind of makes the shorts that we want to do on Solana a little more riskier because the daily is showing that eventually there's going to be a long position here, right? So first trigger that we see is a green moon, right? Now we need confirmation, right? And what's our confirmation that we're looking for? The trade that we're looking for here is a daily trade, a daily red. Now, longs and shorts are the same thing. So we would just go daily red. We just change that to a daily green moon. The 4-hour RSI, 2-hour all going up instead of down, 130 and 15 headed up, and that's it. And we use the same entry every single time. 3-minute, instead of red moon, it'd be green. Instead of red trend, it'd be green, right? So when we go back here,
Yeah.
daily red moon. So instead of red, we'd be looking for green. And then we need the RSIs to cross over. So now let's go back to Solana. So what do we have here? We have our daily green moon right here, right? So I'm going to mark this here to kind of give us an idea of where we're working, right? And the daily I'm going to make purple. And that's just the first sign of a trigger for us to see that there's a possible trade happening, right? Now, the thing about that is once we have that daily, right? It's kind of just running through it. So here's a daily green moon. Now you need the 4-hour RSI and the 2-hour crossing up with obviously the basic checklist, 130.15, and then the greens. So now we know that there's a trade here, but we would need the basics with us, right? So the basics are during this time, let me mark that daily RSI. So when this moon happens, that means there's an RSI at the same level here. So now we know we have our daily, we know that we have our RSI. So now when we rotate to the 4-hour, the one thing that we'd be looking for here is for that basic setup to happen for us, right? So when we go here, notice that the 4-hour is actually headed down. See?
Okay.
So for us, that would just let us know that, okay, there's a trade coming here, but currently it's in a downward position trend, right? We go to the 2 hour. Let's take a look there. And we can see the 2 hour is also working its way down. Now, what we want to start looking at is like, okay, what are the steps to confirm that the trade that we're looking for would actually be a valuable trade, right? And what we can see here is that we already have green volume here in the 2 hour section, which is great, right? So that means that the long that we're hunting is actually possible because we're living inside a positive volume right now in the 2 hour. So it puts a
Okay.
nice little section here to where we can see that and go, okay, this is definitely on the uptake here, right? Now we go back to the 2 hour, right? And this is where you can kind of piece together how you can find what you're looking for. We can see that the 2 hour, and this comes back to basically what you are doing or most people do in trading, is when something is so cheap, they accumulate, right? That's no different than a whale. So when you see something where the volume is falling down on a 2 hour and it start getting to a section around 28, right, a 28 level or even a 20 level in this zone here, then more than likely you're probably going to have some type of movement to the upside from this position because this is 28 is pretty low, right? And we can see here that we have our 2 hour green, our 2 hour red, our 2 hour green. And then I want to bring this down here so that you can start understanding like when the movement starts to change, right? So 2 hour green moon doesn't produce anything because there's nothing with it. There's no trend with it. But when this begins to kind of like change its direction is basically when we finally get into a 2 hour green trend. You see that?
Yep.
So this is where using that as a kind of like a checklist, right? And 2 hours are always yellow. Okay. So now I'm going to mark my 2 hour green trend here just so that I understand that at that point, this is where things are uh, moving to an upward type position. And then I'm going to mark
Uh-huh.
here so that we can see that, as we go through trends, we're working our way through that thing. But so the setup here is to trade within the trend, right? We're always trading with the trend. So now we know our 2 hour trends kick in here. And so when we look at this overall, we can start deciphering what we want to use, right? So let's go back to our simple daily. All right. So here we see we get our moon, right? Now, if we're tracking something simple, right? Because most people say, well, what do I track? Okay. I like the higher time frames. I like working within the 2 hour and the 3 hour time frame, right? And using the 1 hour as kind of like the 2 to 3 moves that are going to happen within a 2 hour or 4 hour, right? So first thing for me is tracking a 2 hour trend, right? So it's something as simple as tracking when 2 hour trends come and go, and that is where trading with the 2 hour trend is a lot more focused on what I want to find, right? So if I have my alerts set, and I'll show you how to set them in a little bit, but so if I have an alert set on a 2 hour trend, right? The 2 hour trend happens right here. Now I can review this Solana at that moment and go, okay, hey, well, where is Solana right now? And I can see right here that my daily RSI is starting to cross. See right there?
Yep.
So now when it starts to bounce, I can use this as my position trade and say to myself, okay, if this breaks the 20 line, then I'm going to consider this an entry point here. So that to me is kind of like how I determine a trigger for a trade, right?
Okay.
So right there,
Yep.
I have a trade right there. So that simple is something where I can say, okay, this is leg one, right? And it's important to cover that because it's like the basis is this. Once you find a trade, you need the confirmation of the trade, which is normally the retrace or the pullback, right? So once you find your position, your confirmation is the second leg, right? So that's the way to kind of look at it. So you have two trades. You have one that's completely bottomed or completely on a floor where it has really nowhere else to go, and everything says that it has to move up, meaning you've got 4+ indicators saying that this has got to go a certain direction. And then the second one is the basic way to trade, which is trading with the market, meaning that you're trading with the FOMO or you're trading with the whales, right? You're trading with what has to happen. And the two things that have to happen is one is whales have to take profits. That will happen every time. And two, normal traders, reach like your investment traders will trade the second leg, right? So those are two things
Okay.
that you know are going to happen. Okay. So when you see something happening, you can position yourself as a whale accumulator or position yourself as a investment trader, which is someone who trades the second leg. Okay. So here,
Okay.
a whale would see this position here, and with the 2 hour trend change and the daily crossing at that moment right there, that would basically put me in a position where, and I'm going to mark this here, make it purple. I'm going to make it a little bit thinner because that is simply the crossing. So now these two triggers here, a 2 hour trend, a daily crossing, right? This is a
Uh-huh.
whale accumulation move because that tells me at this point I'm at a pretty low point here. I got a 2 hour trend, meaning I'm going to get some upside to this, and I have a daily RSI completely at the bottom, right? And now what I want to do here is I want to review the overall because I want to basically cover the how it would look on your checklist, right? So let's go to our checklist here. Okay, so on our checklist, the 2 hour hits here. Notice that your 2 hour RSI still has room to go up, right? Okay.
Uh-huh.
Now, first move, now, same thing, patterns. First move up, see it? Causes the trend to trigger. The pullback of the 2 hour RSI, see that? The crossing of the daily right here where we marked is also where the 2 hour decides to start to head back up.
I got it.
Get
Yep.
it? So this right here is where we would decide that this is a perfect place because you see the bounce right here, and there'll be a lag, so you
Uh-huh.
you won't see um, you won't see this until it pops here. But that would trigger that you would be entering inside of this zone here. So this right here would be your buy zone, but you should be buying right here. And how you would get that is you simply hit a right, and what I'm doing is the RSI. So I would click right, and all I'm doing is going to my RSI. I would add a RSI here, and you can see here that it's the stochastic crossing on the 4 hour. And all I'm going to do here is just basically get rid of all these numbers here so that when I see this, I know that it's the RSI on Solana on the 4 hour. See? Now, I could put this basically once per bar, just so if I miss it, it happens again. But now, what had happened is this, right? We see the 2 hour trend happen. We are waiting for the daily to cross, right? We set
Okay.
the crossing on the 2 hour. Why do we set it on the 2 hours? Because the 2 hour RSI is also the higher time frame that we want to work off of, right? So think of your 2 hour as your middle ground. It gives you access to two trades with inside a 4 hour, and it gives you two trades from a 1 hour, right? Meaning that you can do day trades off the 1 hour RSI inside the two, and the two also has two trades inside the 4 hour. So this gives you an open area where the 2 hour is basically your middle indicator that will tell you
Okay.
what's happening on the larger time frame, and also allow you to focus in on the smaller time frame that'll let you know where it's going, right? Or where's the pullback or the retrace or whatever, right? Why isn't this moving?
I, so it just clicked for me when you say a trade within a trade, and then that made sense of the 2 hour of being able to get the 1 hour.
Exactly. Meanwhile, Maxi froze on me. I'm up on Solana, but it didn't register. Oh, there we go. It better register. Yeah, I was gonna say, boy, be sneaky. All right. All right, there we go. There we go. Pay a man. There we go. All right. So, so because that I just played that reverse because we had that big pull down and the 1 hour was at the bottom. So now I'm just playing the normal 15 and third minute bounce, right? So this is just like a day trade or a scalp trade. So that's where people have to realize, like, the one thing people keep confusing is what trade they're in. They're doing You can't do a pullback trade if there's not a pump, right? So a pullback trade is normally on a 15-minute and a 1 hour red moon. But if you get a 15-minute red moon, but the coin hasn't pumped, well, then it can't be a pullback because a pullback is based on a pump. So when guys are like, "Yeah, I did a pullback, but there was no pump," and I'm like, "Well, there's no money to pull back from. So why would because the pullback is based on profit. So if no one's in profit, how would it pull back?"
Right.
Right. So you have to understand like what trade you're doing, right? So even if indicators are lining up the same way they line up for a trade, if that trade hasn't developed, then it's not possible for what you're looking for at that point. All right. So let me put my stop loss in here. And this is kind of like, so let's say we put our stop loss here and we say, all right, we're going to take 30% and then I want a 150% profit here, right? And you kind of like set that in. It might go a little bit lower. I'm gonna give this a little time to run because I'm gonna take a 5% there just so that it has it. I don't want to close out too early while it's still moving. All right, so that's the first thing. So the first thing I did there is make sure that I'm not taking a loss on that trade. So now I at least have a 5% in there, but it's the beginning of the trade, so I don't want to cut it off too early. But if I'm doing and it's only basically it's 10% of my bag, right? Or so forth. Now, if this was $1,000 bag, then my goal would have been 20%. You see what I'm saying?
Yep.
Yeah. So it's the concept of understanding what you're doing, right? On this
Yeah.
particular trade, I'm I know that I'm going to let this bounce and see if it can push up because I'm expecting a 30-minute, 15-minute, 1 hour bounce. And I want to see like how far that'll go. And when it's done, then we'll reverse, right? And the reason why I do that is because right now I'm checking. Um, I'm always watching the bounces and how they react, so that when we teach, I can be like, "Hey, man, I do the basic trade every time, right? And it's very simple to do, so I know it works all the time, right?" The second thing is the concept. It's like when you watch the trading, you have to realize what you're trading. Me personally, here, I would have told somebody, hey, if you see that big, I always tell people when you see a big dump like that and you see the 1 hours of everything reversing, I would have played this with the $1,000 bag and simply went with like a 30x and took 30% profits, which would already be done here, right? And that's kind of like
Right.
the end of it. So it's the profits all that matter. The biggest problem is people get into a trade, they win the first trade because they were disciplined in how they entered, and then they realized that, oh, it could go for more, and then they re-enter, and it takes back their profits
Yep.
because the steps were already done. Right? So you either commit or you don't. Like right there, I could have took my profits at 20%, right? But I decided that I'm going to commit to this trade. So I don't want to get back in this trade. So I said, all right, you know what? If you stop loss me at 5, I'm going to call this trade over, and then I'm just going to wait for it to finish, and I will take its reverse on its way back down, right? Because it's what it's setting up for. Solana's setting up for a short here. But I'm very like, what I'm taking is what I'm going to take there. So that's where you have to kind of like not overstep. So now that it's at the 40% area, I can come in here, and I have the 5. First thing I want to do here is move this over to where, let's say we're taking at least 13%, right? Now we're there. We got our 150. Now, no matter what happens, I take 30%. But this is where, as a profit taker, you hit see the little add button? You hit this,
Uh-huh.
and what you're doing is you're going to take profits. I'm going to take 25% profits here, or 20, and I'm going to take it at the price of 30.50. This is where you can kind of, so this is a stop loss, right? So I want it at 30.45, right? So right now, you see how it's 30.46? I'm going to set this up to where I take at least some profits at 30.45. This original was set at 150. I'm going to set this at 200 and make it generic. And I'm just going to keep it at the 100x because I don't really care at that time because it's higher than my total. But if I would have set that, you notice there, we would have took our profits. See there? So what I'm going to do here, just to kind of set it to show you, I'm going to set it at 43. I'm going to confirm it. Let's see if it get confirmed. Sometimes if the number is going lower than what you are, it won't confirm right away because it's already below it. But what I wanted to do there was show you how to take a quick 10% off your higher position. And that way, as it continues to move up, you're taking 10% at a 40% mark versus the 13% mark. See what I'm saying? So let's say here that we want to take profits, at least 10% of our profits at the 43. So now I move this down to where I'm at 16, 15%. Now what I would do here is I would simply take this profit and I would say, you know what, take profits at 30.45, take 10%. And then here on this stop loss here, I would slide this down to 30. And now I'm taking 10% if it hits 30, and I'm taking 10% when it hits 45, right? And that way you can set these triggers throughout your trades to take profits as you move. That's what a lot of people don't do is they're not like setting their profit zones and just basically
Yep.
milking out a trade. So now when that trade's done, I don't really care about that trade until it actually resets up and gives me something, what it's going to do. So is it going to run here even longer? Probably. But once the trade is triggered and I got whatever profits I took, at that point, I'm done with it until the next proper setup. So that next setup is going to be when the 30 and the 15-minute finally finish their bounces and they start to head the other direction where I can see that I'm getting into a proper layout, right? Okay, so now let's get back over here. So this is the trade where we're basically looking at the whales, right? 2-hour RSI or trend changes. The daily RSI crosses over, which also happens to be the moment that the 2-hour crosses back up or makes a move to jump. That would trigger that we would be entering in this section here, right? So now that means that we would be looking here inside of here for a trade. Like that would be considered that what we would be looking for a trade. All right, so this is a whale
Yep.
entry, right? Now, if you look at this and you go back, what you see is that you had a trigger here on the 4-hour. The 2-hour RSI, right? And there's always a double move. Remember the double move, right? So here's the first move, right?
Yeah.
Here's a push. Here's the pullback. Here's the second leg. See?
Wow.
Right? So what we're
Yep.
looking for is here's the first push. These are the whales getting in, and then people who were in start taking some profits because people caught on, and then it comes down, and now this is where they're going to ride it out. Now what we're looking for is consistency of what we want to see, right? 4 hour moon, right? We know that our daily is over here, so we can see here on the four. That's why I'm saying working with the 2 hour allows us to trade within, right? So the daily trade is the big trade that we're looking for, which is where we get a daily moon here. See, this is the daily moon. But that daily moon doesn't come until the 4 hour builds into it. This is the momentum, right? So we have a 2 hour trend, which happens here, right? And this is where people have to understand, like letting RSIs reset. Because even though we had a 2 hour trend hit right here, notice that it went down. See the pullback? So now,
Where where
so here, remember this yellow line down here?
where did oh, okay. Okay.
Yeah, yeah,
Got
yeah.
it.
That's why we mark the IRSIs with what you have. So this is where the daily trend came in. This is where the daily RSI broke. This right here is the daily moon.
Got it.
Yeah. So this is the basically the momentum to the changing of what happened here, right? Because we're coming off this massive short. You see what I'm saying? We had a nice little dump,
Yep.
plays itself out. How do we know we're coming to an end? Well, everything starts to line up in the other direction. During this time period here, the daily RSI was headed down. The trend overall was a downtrend, right? You see all that downtrend. Now, where does the reversal come? Well, like I said, the 2 hours working within the 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 day trades and the position trades, right? So now the 2 and the 4 work together for your position trades, and these are trends and moons, twos and fours. And then on the day trading, you're using twos and ones. Get it? Because the day trade, you're using higher leverage because you're making a shorter trade and it's more of a 50 or a 60 to 80% trade in there, right? So you want a day trade around 60, position trade around 30 because the position is going to go
Okay.
longer than a day. But this is how you use the 2 hour in both scenarios. Okay. First scenario is here if we're watching the 4 hour, right? And the 4 hour triggers a moon, right? So let's say that you're watching and you see that you get a 4 hour moon and you're like, oh, okay, right? Now, a 4 hour moon brings a pump, right? What do most people do when they see the 4 hour moon or a pump? They get in, right?
Jump in.
Mm-hmm. And then it pulls back on them and they don't know what happened.
Mm.
There was no confirmation to this. You have a 4 hour moon, but you don't have a 4 hour trend, and you don't have even a 2 hour trend, which would be where the 4 hour becomes a trend, right? Now, the thing is here is when that 4 hour hit, they did get a trend. They used those two things as buy signals, and they bought here and got wrecked on that pullback, right? Because a lot of times,
Yep.
once something pumps, this is where volume is key, right? Once it makes its move, people are going to sell their positions. And if the whales aren't, happy in their position yet, there's a continuation. Whales aren't going to sell the short move. Those are just people that bought low. Those are got people like you. You bought low, it pumped, and then everyone dumped. But the whales are still in. So then it goes sideways, and then people are like, "Hey, you know what? This isn't bad." And then they start buying again, going, "Hey, if it went here into here, then it should retrace, right? Remember the retrace?" So people are buying
Uh-huh.
this because they think it's a retrace, meaning that if it had this wick, why wouldn't it come back and go back to that wick? A lot of people's philosophies are based on this: a move, a retrace, enter to the next move. Right? This is the zone that people are buying in because they think it's going to retouch or retest. Right? You ever heard of a double top?
Yep.
Yeah, that's what it is. The push, the pullback, the double top. That's what people look at, right? So when this first sale happens and everyone panics and says, "Okay, I got my profit," and it pulls back, and they're like, "Oh, okay, it pulled back," and they're like, "All right, I'll buy it again," and then all of a sudden, That's where you get people realizing that it's starting to move, right? So the first move is kind of like um, what they say, like uh, a signal that things are getting exciting, right? It's like, somebody buys something and they're like, "Hey, man, this is really good," and then all of a sudden a bunch of people buy it, and you're like, "Yo, it is good," and then it kind of slows down, and then people really like, "Hey, you know what? Everyone's buying that," and then all of a sudden FOMO comes in. It's the same scenario over and over. You just have to realize why it's happening, and the way we predict FOMO is we work off volume, because volume
Okay.
will dictate what's really happening, right? Now, how to look at it is this: RSIs are people, right? Think of the RSIs as sentiment, right? You ever hear people say, "Oh, the sentiment for this stock is good," right? Sentiment just means
Yep.
that people are looking at it, right? Doesn't mean they're buying it, right? And sentiment is also, if you have 100 people and they come in and buy $1 each, and it moves 1 point, and you're like, "Oh, people are interested," right? That's what RSI is. RSI is kind of showing you that people are coming in, but it's not showing you how much they're spending. So you could go by a store and the store could be packed, but if no one spent money, it didn't matter. Then you can go by a store
Right.
one day and there's no one in there, but someone's in there spending all the money they have. Right? That's what volume is. That's why we use the moon indicators. And what I want you to start focusing on is these lines here. These lines are going to be your price action, right? This is telling you what volume is actually doing. So when buyers are buying, this is telling you how much they're buying, right? This is telling you there's buyers. This is telling you that they're actually spending money. So these are
Gotcha.
key. Get it?
Yep.
So you'll hear sometimes people will say, "Oh, there's a divergence," right? A divergence is simply when the RSI is showing you that the buyers and sellers are going the other direction, but the price is going up. That's because even out of 100 people, 50 people left, but the 50 people that are left are buying twice as much.
Yeah.
That's a divergence. This is why this RSIs are really just nice to keep you up on sentiment, but it's not telling you the value. That's why we use the moon indicators with price action lines. The price action lines tell us what people are buying and if they're actually buying a lot. Okay. So,
And then if your RSI, if more people are sending more volume, then that's the better.
yeah. So let's think of it like this, right? So let's say your RSI is going down because the sentiment is going down, but the people that are interested are buying more, and your price action lines are going up, right? And you're sitting there watching the price go up and the RSI is going down. Well, the odds are is by the time the RSI figures out that people are buying, that's going to turn the RSI back up, meaning that people are going to come in because they're going to FOMO. And now the RSI changes direction while your price action is still going up. Then next thing you know, you have a convergence of price and FOMO, or price and like what they call that. So when they both go in the same direction, you not only do you have your price moving, because that's all that matters is the money. But once the money's moving, and then you add more buys to it, right? Even if they're smaller, that's what really drives the pump. Because you could have the big buyers in there while everyone else isn't looking, and they're buying and buying and buying, and the price is going sideways and bouncing a little sideways and going up, and then all of a sudden the masses turn around and go, "Hey, man, there's something going on here," and then they start flooding the market because now they're buying because they can see that why everyone's turning their head, it's going up. That creates the boom. That creates the pop, because now it's a fluctuation of money into a situation that's already moving up. So there is no down pressure, there's just up pressure. So
Gotcha.
that's the way to look at your price action lines, because if they're moving sideways or up, even if the RSI is going down, it doesn't matter, because the RSI will eventually turn to the price action, because that's FOMO. That's an influctuation
Right.
of orders. based on FOMO. That's what happens. Okay. So when we're
Yeah.
looking at this, we piece together the basis, right? So right now, what I want you to do, because we're covering a lot of information, is I just want you to focus in on how do we determine a longer position or a longer trade, right? Or where we should be looking to get into a trade. And then once you have that down, then inside of that, you can make bigger plays, right? So the first thing for us here is determining when there's actually a strong move in a certain direction. So, first indicator that we have that we're always looking for is we have our daily moons, right? Meaning that there's going to be this move here. Now, before that happens, we have what's called the reversal, which is where we discover the changing of a trend. How we do that is simple. We allow our 4 hour to tell us when sentiment and price are starting to converge. So here you have a moon because you have the RSI pushing up with the moon. You have a sentiment change, meaning that people have decided that this is a pretty low price. That's the first move up. Now, because there isn't the rush of orders or the money from retail investors here, the volume is low. So it pushes up, cleans out a bunch of orders that were here, and then boom, it comes down and it regulates and finds a floor. Now, how we know what's happening is that we are tracking volume. Okay. The biggest thing for us is when volume happens. So, for instance, one of our longs is basically called the 1 hour long, right? And a 1 hour long works off a very simple system. All right. And let me see where we were here. And once you understand the trades that you're looking for, then you'll understand what's happening, right? So, first things first, the trade that we have is called a 1 hour long trade, okay? Now, how does a 1 hour long? The basis of a 1 hour long is that you get a green moon on the 1 hour, followed by a green trend. Confirmation, very easy, is positive volume, okay? So, moon, trend, positive volume. See that? So when we see this trade, we'd be looking for one thing, a green moon, right? We get the green
Okay.
moon, we know that there's a trade coming, okay? Once the green moon hits, we know there's a trade, right? Now watch again how the trades work. There's a move. See the move?
Yep.
There's a reset. The second leg. See that second leg? Now,
Uh-huh.
the thing about this is that these two moves happened before we got the confirmation of positive volume because this is the zero line here. You see that? The double, you
Yep.
know what I'm talking about, the 0.000. So here we're sitting in
Uh-huh.
a zero line, right? Green moon comes, okay? We get a push here because the green moon triggers that. What all a green moon is telling you is that all of a sudden a bunch of whales started buying, right? Now it doesn't tell you how much they're going to buy or what they're going to take out. They're just setting the table. Okay. They're just realizing that at that moment on a 1 hour, that's an area of interest for them and middle buyers so the 4 hour moons are more like your whales. The 1 hour moons are more like your investment buyers, right? And they decided at this moment that this price for Solana, when it got to this area here at $17, see, this came flat, bounced, flat, bounce, flat, flat, flat. See, this period here, this 4 hours of no movement here, triggered investment traders to say that this is a floor. See how that worked?
Yep.
So, floor, 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 floor. Okay, good place to buy. The sentiment for Solana at that moment, $17.50 looks like a good buy. Okay? So now the people that saw these pumps here that didn't take profit, saw this come way down. It pumped again. It didn't break out. It came way down. They panic. Now it broke up. They sold because they don't think it was going to do
Yeah.
anything here, right? So they drive the price down because they're bad investors, right? And then what happens is out of nowhere, yeah, it's funny, right? It's so funny when you actually like know what's happening. And then what happens here is this actually should have went up, came sideways, and then ran. But they panicked because here they didn't. They saw this push, bought this, it pushed. They didn't sell. It dumped on them. They panicked, and the next time it pushed, they said, "I'm getting the hell out of here," and they did. And then they caused this to happen. But this all should have been one move up. All right. So what should have happened here was this move here should have came up, then the pullback to the first leg, and this is the second leg,
Gotcha.
right? So that's where people get confused. Now, how do we determine like what that is, right? We determine it on volume. We know that these guys who sold here weren't anything important because the money isn't here yet. See how the volume on the 1 hour is negative? Right? So
Mm-hmm.
all we had here was basically whales buying their position up, eating up position. And then right here, see the price action push up? Here it starts to come down. We are looking for these two lines to coexist. So when that blue line starts to bend up, that lets us know that we actually have real pressure here that we're buying into, right? So in here is where we would decide that we're making a decision on a trade here. Now, the one thing that we're going to do is once that move happens on the 1 hour, we are looking for what's called a pullback or a retrace, right? A retrace isn't where it's more like where they're going to set the price, right? And we can see here we get the 1 hour to come up. We don't have positive volume yet. It breaks it a little bit here, and then all of a sudden it pulls back, right? See how it breaks it, starts to pull back,
Yep.
and we see how the blue goes sideways. We now
Mm-hmm.
know that we are headed for a push. The trigger for us would be when we get this 1 hour green trend. See the momentum? So, first thing happens is the 1 hour tells you that people are starting to buy this position. There's a push, it pulls back because people sold too early. Both our price action says, okay, people are getting interested here, right? Hasn't broken positive volume. It pulls back. Now, trigger one, right? Trigger two, there's a push. There's a pullback. There's a consolidation. Trigger three, the 1 hour trend says, I'm going green. We buy that because now we have go, go, pull back. But as soon as this starts to move, so you can see the price action. See how the price action is moving up right there? As soon as we see that
Uh-huh.
price action starting to break up and that trend hits, now we have our green, we have our first pullback. Now this is the second leg. That's the confirmation. The trend confirms
Got
the
it. So,
second move. Now, me personally, I don't need the trend to confirm it because I have the price action confirming it. See that?
yep.
So for me, this is an area that I could look at and take advantage of. Plus, at this moment, the green trend hits and the 2 hour trend hits both at the same time, saying to me that, okay, this is my trade. Now, because this is a 1 hour trade, this is a day trade, okay? Meaning that we would pick this price up even if we bought it at that first candle push, it's 2% move.
Mm-hmm.
So if you're doing a 50x or 60, you just made 120% on your trade, right? Simple trade, in and out, okay? That's a day trade, right? The push,
I like.
the pullback, the second trade. See how that worked?
Yep.
Now, on the overall, this is trades that are happening within our trade. Now let's go back and kind of review what we have. At the end of the day, this is the 2 hour trend. We still have not had our daily crossing, which happens here. See what I'm saying? Our entry, our entry on our main or our position trade doesn't happen until we get that crossing here and everything else kind of falls into place. So now that we know that this right here is where basically the trade should have happened for, and I'm going to take a little box here. I'm going to put this on the moons and I'll make this thicker and I'm going to leave that there and I'm going to make it white because white is for 1 hour. Now I know that this section right here basically constituted a white 1 hour trade, right? And I'm gonna leave that there because that's one day trade that happened inside of that trade. Now, if you go along, right, and you say, okay, boom, there's your first trade, it changes back. What do you get? A red moon. Comes back down, right? What's your trade on your 1 hour? Green moon, positive volume, right? So here's your 1 hour moon, here's your 1 hour volume, here's your price action pulling back, here's your price action going up. See? Next
Yep.
next trade right there. Another day trade right there. Pulls back, comes back, 1 hour moon, price action actually pushing up at this time. So you would ride and then your blue, see the blue going with it? Here, you would be
Yep.
taking this day trade as soon as you enter, you'd be pushing your long because you have your RSIs and everything with you at that point. And now here's the difference. Okay, watch. First day trade comes in. Volume barely crosses. We catch the pullback, we catch that first move, right? Second time, we have a bigger pullback. By the time the 1 hour hits here, notice that we're now sitting above the positive volume with our moon. Now we wait for that price action to pull back down. We enter here, we take that second move. The third move, the volume is outrageous. We don't need a pullback here because the volume has already succeeded the main lines. So at this point, once you get to here and you see this happen, this moon come in, you take the position because the volume is now there. See how that worked its way up? The first
Yeah.
trade,
Yeah.
you needed to pull back because you had less volume. The second one, you needed the same confirmation of a second leg. The third one, that's basically already confirmed that this is a push. So the third one, you get in right away and you ride that up. You don't look for the pullback. And that's where people make the mistake because they're not understanding the position of their volume. That makes sense?
Yes.
This is FOMO. This is whale. These are whales positioning. These are investment traders positioning. This is retail investors.
Gotcha.
They're already the third leg. They're already late to the party, but they cause the most money to happen. And then people do what they're supposed to do. They start taking profits. Boom, boom, boom. And eventually they draw it down to a floor and it starts all over again. So that's where, when we're looking at this, understanding where volume is key, right? And there'll be other indicators here for the day trade that would have basically triggered knowing where you're at and your 30, your 1 hour, and etc. But that's kind of like how to break it down in a nutshell. The volume is really what we're looking for. All right, so now that we kind of understand where the day trades are happening for us, we can also see here that we have our 2 hour trend. This is where we get a crossing of our daily, and then the point that we would be entering. Remember, we made the entry here. All right, you see that blue box we made earlier?
Uh-huh.
And that entry comes right here where you would be entering off of, remember the checklist? So let me turn this a little bit, a lighter blue. Okay. So remember the checklist is what? Trade with the 1 hour, 30, and 30, right? Notice here when this daily crossed and we had a moment that we would enter a trade, which this is where the 2 hour crosses again. Remember, this is where the 2 hour crossed. Notice that the 1 hour is heading down on us, right? So what we would have actually
Yep.
done on this is we would wait until the 1 hour bounced. So that would have put our entry in this section here for our
Oh,
position
nice.
trade. Yeah. So that would be our position trade, which would have happened somewhere in here. Even if we got the higher end of it, when this moved up, we'd be sitting somewhere in this position here as far as our position trade. That's an early whale trade for us, right? So now let's move across and say, okay, that's the first leg that if we're paying attention that we would get into. Now, the other thing that we're waiting for is our daily to completely consider the movement. So let's fly it back over here. We'll move to our daily just so we can set ourselves up again and kind of like break down what we're seeing on the overall. Because the entire goal here is to be in a position where we're doing our dailies. Let's see here. All right, so the overall. daily moon, daily moon, daily crossing of trend, 2 hour, right? All that's in here. This is where the 1 hour trade would have basically triggered in there for us. And that would have put us right there. So now let's go back to our daily, right? So now we know we have our daily moon here. We also know that this box here would have triggered the 1 hour coming from the bottom. So now let's take a look at the overall, knowing what we understand. We know there's always two moves, confirmation, positive volume is key for us, right? So all the elements that we use on the daily trend trades are the same elements that we use for our position trade, are the same for our day, and they're exactly the same for the scalp. So once you master the steps of how every trade happens, the same philosophy over and over and over, once you understand that, then you decipher the difference between what time frame you're on, what leverage you're using, and what trade is actually happening, then you will execute at a higher level, right? So
Yeah.
that's a basic rundown of how the day trade or the 1 hour trade operates within a basic 1 hour trade, right? Now, the difference is that 1 hour trade happens three times before another trade exists. But it's nice to understand that one trade because then you can look at any other trade and go, well, I can't do a short there because there's about to be a 1 hour trade. You see what I'm saying? It's a process of elimination, right? So now let's
And
focus.
that's
Go ahead.
experience.
Yeah, this the beauty of the system is that you don't have to go through support, resistance, what kind of
Yeah.
candle, what pattern is this? A
Yes.
bull flag, a triangle, right? This is just
Yeah.
basically following the simple pattern of buying and selling. That's all this really is. It's price action. We move, and this system. The reason why the system is successful is because we operate on money. We follow the money, right? It said it. So if there's money, then there's a trade, and if the money hits a certain point, there has to be a short. This is the bottom line, right? What goes up must come down. All right, so
Right.
basic stuff. So now let's take a look here. So here's our daily, right? The overall is constantly waiting for confirmation, right? So let's say we're sitting back and we already know that we have our 1 hour and our 2 hour, which created the section where we should have entered, and you can see right here, that's our original entry line right there. If we are getting really good at what we do, we would have caught the entry that happened right there. See that one? That's beautiful.
Mm-hmm.
That's how to master that trade, right? And that's basically
Right.
working off of the basics, right? 4 hour green moon. 4 hour green moon led us to a 2 hour green trend. We waited for the 1 hour to reset, right? We got a daily crossing of the RSI, which basically led us to look at the 1 hour RSI and go through the checklist, which is 1 hour, 30 minute, 15 minute. When they all lined up, that put us at our entry right at this point, which happened to be the best point to get this entry. Now, the confirmation, right, where we sit back and say, okay, if we're doing a position trade, right, and we know that the position trade is really going to be based off of once we get a green moon or a red moon or whatever we're getting, the position trade happens off of those moons once it gives us the reset, right? So let's say that we simply go off of a daily moon, right? So the biggest position trade, this is kind of like the accumulation trade, right? So here comes a green moon, it pops up, and we look at it and it comes in, and we're like, okay, that popped up. Now, during this time period, we don't have the positive volume or what we need here, but we're still pushing up. So in a position trade, what you can do here is kind of what and most people do here is what's called cost average buying, right? They see a trigger, it pops up, and for me, I always like to just so rule of thumb is whatever candle you're working on, allow it to process, and then do not enter that candle until about an hour or normally. So let's say we're doing a 3 minute candle, right? When a 3 minute candle hits, you don't enter a trade once a 3 minute candle hits. You allow 2 of the 3 minutes to pass, and then you enter on like the last 45 to 30 seconds before the next 3 minute candle, because
Okay.
that's going to be where if it's pushing down, the next time it hits, it's going to give you a push. Or if it's pulling down and it's pushing up, you're buying when that little pump is happening. So you're kind of looking for the pump like right before that 3 minute, at least about a minute or two in, and then boom, you buy that pump, and then it's the next move for it is going to be the pop of the candle coming in. You know what I mean?
Yep.
So when you're doing a daily, you apply the same scenario and you say, okay, before the next daily, I need it to kind of like pull down. So like a lot of times that's where these wicks come from. There's a candle that's just pumping, and then people get in like at the 30-minute mark or 20 minutes in, and then at the end of the 1 hour candle it pushes up, and then what does it do? Comes all the way back down. Takes 30 minutes on the way down, right? So what you'd want to do is let that 1 hour candle get to the mark about 45 minutes in, and you want to start analyzing the price. If the price is starting to go the direction that you want it to go, that's where you would start price, coming in and cost average buying into that little section and start buying that up. And then the next candle should do what you want it to do. Okay. So here on the overall, what we want to do is basically have where um, the everything's working in our direction. So we get a daily moon, right? And a lot of guys will buy here on the daily moon, somewhere around 1818, a little bit higher. And then as the price jumps up and comes back down, then they would start buying on that next candle 45 minutes out. They would buy. And then when this next candle comes in, wherever it goes down to, they would buy, and they would buy up price in between here. So they'd start off with 20 to 30% of their position. The next candle, whatever the low is in there, whatever they can see, 20 to 30%. The following candle, another 20 to 30%. The next candle, 20 to 30%. And then they'd see their move. And then, they're kind of locked in at this price here. Now it eventually comes back and pulls back and goes on the run. Now, what we do is we don't want to go through this position here where it's kind of like up in the air. Now, to be honest, it's depending on what you're trading. If you're working that position and that type of move inside of a day trade, I mean, this candle here is, it's a 7% move, right? You see that? So
Uh-huh.
this little section here is very profitable for some people here. All right, depending on what trade you're operating on. This is a very, very profitable position. What we want to do is when we're doing position trades, is we want to make sure that the trade that we're getting into is basically in a good spot, and it's going to have, it's going to make its move in there. So we'd be wanting to get in somewhere in this position here, or we want to see what's called a retest or a pullback, which right here we can see the moon comes in. We see these candles push up, and then there is a candle that pulls back on us here. When that pullback happens on this candle, we would be looking to buy in this position here.
Got it.
That's where we would be thinking would be our best position. Now, for us, confirmation on everything is kind of like key. So where would be, for us the best time to enter? So I'm going to take a box here and I'm going to frame out the moon, and I'm going to frame this here. I'm going to make it purple, and that's the daily box. So for us, we need to say, okay, where do we take advantage of these two moves, right, before they explode, right, which is kind of like here, and then kind of go up. Now, I always like to have three confirmations, right? First confirmation is we get a moon. So remember how the 1 hour was? You get a moon, right? And then when you get a moon, you get what? Positive volume, right?
Yep.
That's kind of like the basic move. Moon, volume, moon, trend, right? Here's moon, here's trend. See how it's moving towards positive volume? Same thing the 1 hour
Uh-huh.
trade did. Moon, price action does what? Goes up,
Up.
rejects,
Pull.
comes down, and then starts to feed itself again. You see? That is
Yeah.
where we would take a trade here. It would be on this first move, pullback, second move confirmation, positive move up. See that? How do we
Yep.
know? We caught a trend here. The green trend right there.
Yeah.
Trend signals, we buy here. So this here would be our actual trade right there. By
Yeah.
following the
It's finally starting to make sense.
Yeah, following the same things that we're doing. Now, does the trade does it pan out 10 out of 10 times? No, sometimes it jumps on you. But if you know why it jumps on you, then you'll know that why it didn't pan out for you, right? Here, we're working from negative volume, which means what? It's going to have weak pumps, which have to have pullbacks, right? Now, once it gets volume, remember I showed you the 3 1 hour trades? The first trade had a
Yes.
pullback, the second one had a retrace, and the last one went in directly and it just pumped.
Yeah.
The difference was volume. Here, we're in the same scenario. There's a push, which has to have a pullback. There's another push that has to have a retrace. And if the volume maintains, then it'll just be the next time that this particular trade does its third cycle, it'll be a complete run. Now, you're not going to see that happen on a daily trade where there's not a bull run. Now, when the bull run comes, oof, it's going to fly. But right now, there's not enough money. There's no money in the market to do a 3 cycle daily trade. But there's plenty of money to do a 1 hour 3 cycle, right?
Right.
It's completely different for a daily because a daily is a massive trade. So more than likely, that's only going to give you 2 trades, right? It's going to have 2 pushes, right? That's kind of like the limit to your daily, right? So let's take a look here. So here is the routine for us would be a moon. We need positive volume, nothing. And then you see the price action give up on you and it starts to come down. And then right here, your 2 hour notices, remember these yellows are our 2 hours. These are where I marked the 2 hour trend. Trend, 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 right? So here within this section, we'd have a 2 hour trend that went green to red, and now it's green again, right? So now when we come here, we can see that we got a 2 hour green trend again. And then right here, we can see our price action come up, go through its rejection, and then boom, right there, we see that push right there. Now, that
Yep.
push would also trigger to let us know that we have a green trend on the daily, right? Now, right there, I'll show you how to set this trend in a second. That trend hits. Now you see that trend pop up. You're going to get an alert on that trend a lot earlier than what you see, and you would be buying in this section here. Now, when this trend hits, you would see this push up of this candle, and what you would do is you would allow that candle to go up, and then you would buy at that candle when it starts to come down somewhere in this section here because you would let that wick come down, and then boom, that would be our entry right here. Okay. Now that works just
Got
like
it.
the 1 hour because you're not going to catch this. If you're good, you'll catch that trend early and you'll buy somewhere in here. Like you could probably get into this space here, but it'll be somewhere in here. So I'll just put it a little bit higher just for mistakes. All right. So at that point, that's our trend. That's our buy. This is our entry. So this is our position trade here, right? Now, just like the other trade, which we just went through the 1 hour, right? There's the first move, then boom, there's the first leg of the real trade, confirmation, there's a pullback, boom, then here's the second trade. Now, is this going to go to a third cycle? Probably not because it's a position trade, right? So here, it'd be very hard to get us a third cycle out of this trade, and that's why I'm setting up for a short on Solana here because it's pretty much exhausted. Get it?
Yeah.
Okay.
How long is a position trade usually?
Position trades can run for, you can go for, you can literally do 2 days or it could do 7.
Okay.
Really depends on the money, right? Depends on the coin, how much the coin is, right? So once you get a coin that you like, because you only need so many coins, you get 5 or 6, 7, 8, 9, 10 coins that you always trade. Once you start to trade them, you start to realize like, oh, okay. And here's something that you want to keep in mind when you research a trade. Make sure that you're researching a trade, and when you look at look at its best movements, right? Now go find the best time it moves, and then go find and calculate how many percents, right? 1%, 2%, 3%, whatever, and then go calculate, and then go calculate its average moves, like when you see spikes, and then see what those percentages are. If the daily moves, that the big moves are not 20, 30, 40%, and the small spike moves are like 2 or 3, that's not a good trade, because that means that every time there is a spike, it's only 2%, which means your best 30% is only going to get 60, which means half the time it'll be 30, and half of that means 15. You see what I'm saying? You want to do a 50, 50,
Yeah.
50. So you want to find a coin that is actually paying out, right? So you can see
Right.
sometimes you'll see a lot of green movement. You'll be like, damn. And then you go measure it, and it's like 1.2. And you're like, wow. And you know what? People trade that coin and they don't realize there's no money. And they're like, I can't make no money trading. And it's like, yeah,
Right.
you're trading at something that doesn't pay out. Of course not. What the hell? So here, what I mean by that, if I look at Solana and I took my little position tool, right? And I go to my long position, right? And I want to see what this moves. I don't care about the big move. I want to see this. Like, oh shit, that little move was like 7%. That's great, right? What about this little move? This little move was 7%. I know I'm going to get paid on Solana because these two shitty moves went 7%. So if I'm not doing a 30x, I mean, I'm already up 400%. So I know that these moves are going to pay me a shitload. Now, if these moves right here paid 1%, I'd be like, nah, I'd pass on this, because that means I need all of this move to get to 4 or 5%, right? And what Solana's actually paying out on these moves are like 118. Way worth it.
Right.
So now that's another thing. Don't trade a dead coin. I got to make more videos on that, because I think people don't get that. All right. So now that we know like where we'd be trading, right? So this is the simple, all we did is walk through the same steps we did on the 1 hour. Green moon, trend, entry, price action, going positive movement, and boom, here's a trade. This trade, if we entered here, ran it up, whatever, 4.8, right? So 200% on our move there. This trade took 27th to the 3rd, right? So 6 days, made your little position. Best part is that's the first leg. So what do you know by that? You know there's going to be a pullback because now volume is positive. So first move happens, you take profits. You wait for the daily RSI to resend. Goes all the way down. Do 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 do. Now it starts to bounce up. What are you looking for? Just like we did the 1 hour. Green moon, right? That's what we're looking for. Green moon, green trend or positive volume, right? Green trend. Well, same thing here. You have a green moon, you go along, you get triggered on a green trend. Next thing you know, you're entering, here's your green trend trigger. So you're entering somewhere here. Once again, I'll move it up just to be, let's say you're terrible at this. So you enter there. What do we get from this last move that we just made? I don't know. 30% is not too bad. Worst case scenario, 26. So at the end of the day, there's 900% right there. What did you say you did a 30x, right? That makes sense now?
Yes. Yes. Absolutely. Sorry.
Yeah, you're good. You're
Throw
good.
some laundry in for my son.
You're good. You're good. So that's that. Now that's the key to this. And I recorded this video, and I'm gonna send it to you so you have your own. You can go back and watch it. But that right there is see
Oh,
how.
good.
Yeah,
Awesome.
yeah. You're busy. I'm being a mom. Life is busy. So right there, you can see that we made our first leg. We allowed the pullback to happen. Now on the second leg, remember, kind of like focusing on the moon. This time it's already positive, right? So we don't need much of a pullback. But you can see right here, the 1 hour hits or the daily hits, the price action starts to head down, and right there you can see we get a push up. That's your trigger to buy. So you really should be buying somewhere down here, but you can wait for that trigger to happen and you hit the trend. you're buying in this zone here. Doesn't really matter where you bought. Even if you were terrible and bought up here, you're still running your position, your 30x, and you're still running a solid 28. You know what I mean? The secret is,
Yeah.
waiting for your entries. You should never have entered on the top of this candle because that's a daily. At some point, it should have been coming down in about 40 or an hour or so before the next daily. You should have been buying somewhere in there, or like basically it would be on a daily, you would be looking at about 4 hours before the new candle. You'd be buying in here. So think about on an hour candle, you're buying at the 45-minute mark. On the daily candle, you're buying 4.5 hours out. So you should be buying somewhere in this zone here or getting ready to basically, make your commitment somewhere in that zone there, right? So you should be going down to the lower time frames to get your positions of your trades, which would be simply, let's say, let me mark this out. So let's say we get our price action trend hits right here, right? And this is the daily box that pops up for us. And that's the candle that goes in there. So what we do there is once we get that confirmation there's a trade here, then we would slide into our 1 hour to see where we're at. And I'll do a quick breakdown for you. And that just means that when I got that confirmation, I can take a look here and what do I see? My daily 1 hour is on the floor. It starts to come up. And what do I have? Ready? You're going to love this one. What do I get? My 1 hour moon. What comes with my 1 hour moon? Positive volume. What comes with that?
Volume.
The trend. Get it?
Yep.
See? Moon, trend, buy. So your buy would have happened right there. See how it all comes together?
Yeah. Yeah, it's definitely comes together more now.
And that's where you want to, take a look on the bigger time sets. And then once you get the triggers of saying, hey, there's trades here, then you can go find the trades. Let's say you come in, let's say, yo, VC, I missed this trade, right? Okay, so what does that mean? That means you allow it to go up. And what is it going to do? Reset, right? Here's a push. Here's the pullback, red moon. What happens when it has a lot of volume? The next moon hits. What do? You buy. So what would you be buying? You'd be buying this moon here, which would put you somewhere about here. What does that mean at the end of the day? That means you had this position here. So now you're positioned at 30% right there. Or the daily. Here's your daily. Your daily comes in at 7% trend. Your position, even if you were out of position on your complete trade, which is our 30%, this trade still runs 28% for you.
Nice.
So either way, you got what you wanted out of there. And even if you were late to the party, you still capitalized. But that's how they all come together. So once you find your position trades on your daily, you enter based off the 1 hour trade. Get it?
Yeah.
Because the 1 hour confirms the confirmation. The daily just lets you know that the 1 hour's trades are happening. So see here how the 1 hours are all playing out. Now the daily RSI has reached the top right here, right? So now that the daily RSI is now headed down and things are changing, notice how our volume is starting to change with the daily RSI, right? So now we're headed into this return. So what's the return, right? Return is 1 hour red moon, 1 hour red trend. See? So eventually, once the RSIs and everything changes for the daily, we're going to find the same entry on the 1 hour, 1 hour red moon, 1 hour red trend, except it's going to be with the daily signal that there's a short. And when that happens, then we'll go into that long short on the reversal. Same scenario. But that's how you work through your position trade, and then you enter off the 1 hour. See how that worked? And how you know
Yep.
how it's a good trade is because you're entering a 1 hour trade. So what's a 1 hour trade? Green moon, positive volume, green trend,
Um,
right?
yep.
Very simple. So when you have everything
Okay.
else telling you it's moving, make sense now?
Yeah. Yeah. Absolutely.
So that's how you play the game. Now, what you want to do is just take the time and focus on those dailies and those longer positions, right? And another thing is people say, well, I can't wait on dailies. Well, okay, well then move to the 4 hour, right? Same thing that happens, right? What are we looking for on the 4 hour? All right, notice here, here's a 4 hour green moon. Triggers that there's going to be a trade. There's no positive volume. The 4 hour volume finally hits. What happens when the 4 hour hits? There's a push, right? So here you go. Simple, same scenario, right? 4 hour moon tells me there's going to be a trade. I come along, the 4 hour price action. Notice how the price action there comes up, gets rejected, comes down. RSI's reverse right there. Here's my 4 hour. I'm doing nothing else but the 4 hour. Okay? 4 hour moon.
Okay.
Volume hits, gets rejected. Price action starts to head up. The 4 hour RSI starts to head up. Right? This tells me that right in this section here, right when that 4 hour crosses, that this particular section here, and I'm going to mark this red for the 4 hour, has turned into a buy position, right? Now, where's the retest? The retest happens. 4 hour pushes, comes back down. See the 4 hour RSI? Comes down. We get a moon. 4 hour comes down, price action starts to cross. What happens here? We get a green moon again with the 4 hour RSI moving up. What does that create? That creates a trade. Let me go down here. When does this trade happen? It rolls all the way through the RSI. RSIs come all the way across, and it doesn't start to come down to here. So notice here, this created this trade right here on the 4 hour. First trade, pull back, second trade, right? See, first trade, pull back, second trade, right? 4 hours happen all the time. Now, inside of that, we also have all the other things that are happening, right? So we have our 1 hour, 30 minute, etc. So let's go take a look at these basic entry trades here. I'm going to put a mark here where I have my 4 hour crossing. I'm going to make this into a 2. I'm going to make this red. And then I'm going to put this here. And this is going to be my 4 hour once again. Headed up right there. And there we go. And this also happens to be green moon action, etc. So now I know these trades happened here, right? So let's go back and let's review the 4 hour. So let's just do a quick thing. 4 hour green moon. 4 hour RSI heads down, starts to head up. Price action starts to go positive volume. What else are we looking for? A trend. See the trend? 4 hour trend, right? Boom. Simple, right? There we go. Now we have a trade in here. Now I'm going to show you a little bit on what we were talking about earlier, because what I want to do here is slide the 2 hour. Okay. Now, what I'm going to mark here very simply, and you're going to love this, I'm going to put this here. And this is the 2 hour. So I'm going to take this up. I'm going to make this bigger. Okay. That's the 2 hour trend. Ready? Now, I'm going to put this here. What is that? That's the first 2 hour trend, right? Now, second 2 hour trend. Ready? Here. Where does it end? Oh, it's still going, but there you go. Okay. Now, let me show you how that looks. What I tell you how the 2 hour works with the 4 hour. Right? 4 hour green moon. See that? Then we get the RSI starting to head up, right? We get a 4 hour green trend. See this line here? That yellow line is what?
Yeah.
The 2 hour green trend. That makes this a trade zone. Get it? Boom. There's your first trade. Now it pulls back. As it's pulling back, the 2 hour goes into a red right here, right? So now you can't do a long because you're waiting for the 2 hour, right? Here's the 2 hour trend, right? What happens? You get the RSI bouncing, starting to head up, 2 hour trend and 4 hour moon hit. See the trend right there? Both at the same time. What does that create? The next trade. See how that worked? And now you can hold that trade out until you get the end of your 2 hour whatever, but you can take profits or whatever you want to do, or take the 4 hour red moon. The best part about this is that if you get another 4 hour green moon, it still has the 2 hour green trend, which means you would have another trade here. So when this 4 hour RSI hits this bottom and starts to head up, and this triggers another green moon, you're going to have another push on this on Solana here if that happens. But I wanted to show you how the 2 hour works with the 4 hour. What's your confirmation? 4 hour green moon, 4 hour RSI, positive volume, 2 hour green trend. See that? Comes over here.
Yeah.
Moon, trend, entry. Again, green moon, RSI, 4 hour moon, 4 hour RSI with a 2 hour trend. What do you get?
Volume.
Get another nice simple trade, right? And that's me using nothing but the 4 hour.
Okay.
See, this trade right here ends up being
Yeah.
solid 28%. So that's where you kind of like have your focus. So as you move forward, go with your 4 hour, right? Find your 4 hour moons, right? So you have your positive moon. You're looking for your RSI heading in the price action close to positive volume. If you have a green trend on the 2 hour, that's your third confirmation. First confirmation, 4 hour moon. Second, RSI. Third, trend. Right? Positive volume and trend. Boom. That's an entry. 4 hour moon, 4 hour RSI, confirmation, trend, positive volume. See?
Yeah.
That's the trade. Same trade as the daily, except the 4 hour is working off the side that it's literally 8 positions inside of the daily, which allows you to get an earlier entry. See what I'm saying?
Okay. Yeah.
So moving forward, focus on your 4 hour. Track your 4 hour moons.
Okay.
Track your 4 hour moons with your 2 hour, your trends. Now, in the overall here, the longs that I like to do have a very simple concept behind them, and that's where you would take a look at your position trade, right? The position trade or your day trade. When you look at your day trading video, it's going to be based off this 4 hour trend. So 2 hour trend with a 4 hour trend is the best long. So if you're going to do a long, you'd be looking 2 hour trend in a 4 hour trend. So we would be looking for this. When a 2 hour trend pops up, what are we looking for? We're looking for a 4 hour moon that goes with it with positive volume with an RSI. So 4 hour RSI with the 4 hour with the 2 hour trend. So when a 2 hour trend pops up, you can start going, oh, there's a 2 hour trend. What's your entry? Your entry is going to be a moon with positive volume on the 4 hour. So here, let's say we're coasting along and we see that there's a moon, right? Our entry on a 4 hour moon is going to be a 2 hour trend. That's what we're going to be looking for. Like, see, all these moons come with 4 hour and 2 hour trends. So when you start thinking about the trades that you want to make, because you want to make the most highest percent trades, you want to operate where you're trading with the trend, right? So 2 and 4 hour trends are the best trends to get into. So when a 2 hour trend is with a 4 hour trend, that's your entry. So if you're doing 4 hour trades, you need a 4 hour moon. You need the basic 4 hour moon with the RSI with price action going positive volume. So moon, RSI, price action going positive volume. The confirmation that it's a great trade is 2 hour and 4 hour green trends.
Okay.
So 4 hour green moon, 4 hour RSI, price action headed towards positive volume is the trigger for the trade. Those are the 3 confirmations. Confirmation of how good of a trade it is comes down to 4 hour trend, 2 hour trend. Get it?
Yep.
Okay, so that's what I want you to focus on. and then we'll do a little bit of a research of that, and then go over 10 trades. So when you make 10 trades, do 10 trades using that system, and then track your results of how much you made on that system using like a 20 or 30x leverage. Go back and track it and be like, all right, so I made 10 trades like that. How much did I make? And then we'll review your entries. So when you do your entries, this is how you do them. So you go here, you're going to look for a thing that says 10 trade review. When you enter a trade, just come in here after you enter a trade, set your stop loss, did everything you did. You come in here and put a message. You're going to put Solana long entry 3010. Boom. And what that's going to tell me right there, you see how he has his trades here? I know that when he entered, I
Uh-huh.
can go back and look. And then when you're done, put back, submit you can go back and just basically hit reply to your own message. And then you can post your percentage, right? So you could post your whatever this is called, your tag, whatever this is, and basically let me know if you made money or if you lost. And then we go back and review. But what I can do here is I can go here and look at all these guys' entries, right? And I can find out where they entered wrong or what they didn't follow. You see what I'm saying? That's the
Yeah.
beauty of the 10 trade review. After you do 10 trades, we go back and look at all your entries and calculate how much you actually made and where you're at. So we want to average 300% profits at the end of 10 trades. So make sure after you,
300%.
yeah. So at the average, we want to get
Okay.
a 300% total win percent over the 10 trades. So meaning if you got an average of 40 to 50% on 6 winning trades and lost 20% on 4 trades or whatever, right? We still end up with our 300, something like that. So once you enter your trade,
Okay.
everything's in there. Then you just come in here and say, okay, I did a salon long. My entry was 3010. Boom. And now I know what day, what time. And then when it's done with the trade, just post your banner on what you did. And then we can go back after you have 10 of those trades there, review them. That way we know where you're at as far as that goes.